Young investors ought to be focused on saving. They ought to be focused on the merits of long-term investing. If they want to actively trade, that's great, but they shouldn't expect a quick hit.
Rick Wurster took over as CEO of Charles Schwab in January. His appointment comes at a time when retail investors are gaining more influence over the state of the stock market, which is sparking a divide in the brokerage industry that could shape how millions of people accumulate wealth. What makes prediction markets, and maybe sports prediction markets in particular, so alarming?
I think prediction markets started with the best of intentions. People thought, hey, you can take a position on what's going to happen with the employment report. And what happened is they didn't really take off. There wasn't much volume. Those events aren't really of national interest. There's a lot more interest in the football game or Taylor Swift getting engaged to Travis Kelce than there was on the employment reports. Then the election came around in November, and the volume in prediction markets skyrocketed. And these brokerages that had added it thought to themselves, well, gosh, this is great. We're getting an inflow of client engagement. We're making tons of money. Is there a way to replicate this election, which happens every 4 years, on a more frequent basis? And of course, there's something every Saturday and Sunday that the country loves, and that's football. And sports gambling became a great way to arbitrage the state gambling laws because they went through the CFTC and they didn't have to work through the states.
Do you think that Schwab would ever consider offering prediction markets or event contracts? And if so, where do you think you guys would draw the line?
We haven't heard a lot of interest from our clients. The volume still really is in sports, so it's not currently high on our list at the moment. If we find out it becomes a competitive necessity in the brokerage space that people really want to buy stocks and have access to prediction markets at the same time, it's something clearly we're going to have to consider. We do have competitors. We've got to worry about the competitive landscape, but ideally we wouldn't have to.
Walk me through what is starting to raise some red flags for you this year and why that is.
I think there's a really bright line between gambling and investing. The blending of those two is not a great thing. Now, I'm not some big anti-gambler. I would just suggest a couple things. One, they do that with prudence, which means the right amount of money, recognizing that they're more likely to lose than to win, and that they not conflate that with the benefits of being a long-term investor. I don't think we want to send a message, particularly to young investors, that investing is this quick hit race that you have to win.
This blurring between investing and gambling that you mentioned as a concern of yours, is this something that you think could have significant consequences if we see, say, maybe a major market pullback in the years to come?
What I worry about is inevitably we're going to go through a period of pullback in markets. Markets go up, they go down, that's how markets operate. And so what we're talking to our clients about is the benefits of diversification, the benefits of long-term investing. Over 20 years, equities have never gone down. Over 10 years, they've rarely gone down, and a balanced portfolio has never gone down. So the power of long-term investing in productive assets is a way to accumulate a lot of wealth, and that's what we're out telling the story about. And our young investors and older investors, they believe in that, and that's why their wealth is at an all-time record with us.
One criticism that I hear about this is that putting these guardrails in place is effectively sort of telling individual investors what they can or cannot do in the markets by choosing not to offer something like event contracts or prediction markets. How do you think about this line between protecting investors and, say, patronizing them?
We empower our investors to accumulate wealth and to save and invest how they want to. And we offer a vast array of ways to get invested on our platform, more ways to get invested than any other brokerage that I'm aware of, and investors can do with that what they want.
I had a photo I wanted to maybe show you from a story I did recently.
I'm familiar with the photo and the story. You did a really nice job with that story.
Thank you. I wanted to ask if we can ever expect you in a jumpsuit at any Schwab event.
You're not going to see me in an F1 jumpsuit, and here's why. I think it sends the wrong message to young investors. Young investors ought to be focused on saving. They ought to be focused on the merits of long-term investing. If they want to actively trade, that's great, but they shouldn't expect a quick hit. And what comparing investing to a race does is it teaches the young investor, you've got to win today, you've got to go fast. And if that stock's not going up today, gosh, something's going wrong. What we talk to our clients about is have a plan, stick to the plan, invest for the long term. There's going to be ups and downs. You've got to navigate those, and that's how you accumulate wealth. And I really worry about the message that's being sent to young investors that you've got to get these quick hits as it relates to investing.
I've talked to Robinhood about this, and this is what their chief brokerage officer, Steve Quirk, told me. The next generation of investors That's who we serve. We are introducing more assets and capabilities to people because that's what they want. Is it true that you have to maybe do things in this way to cater to millennials and Gen Z?
We are crushing it with the young investor, and we're doing it the Schwab way, which is to help them in their financial life get to where they want to be. The average age of our client is in its 40s. The average age of our new client is in its 30s. The most downloaded article we have this year is the basics of bond investing. And 75% of the people that downloaded it are under the age of 35. And a third are under the age of 24. So we've got young investors that are taking the long-term view, thinking about diversification, and that's who tends to come to Schwab. And it's why we're winning. We're $11.8 trillion of assets. We've brought in $400 billion of new assets just this year through October, which I think is bigger than the firm that thinks it's winning with young investors. So I'd say we're crushing it with the young investor.
The Trump administration has pledged to create these savings accounts for very young investors, those that are kids today. Does Schwab have any plans to partner with the administration in offering these accounts?
I think regardless of your politics, the Trump accounts are unequivocally a great thing for our country. We got our start as a firm because we democratized access to investing. Back when Chuck started the firm 50 years ago, if you had $1 million, you could get invested. If you had $100,000, which was a lot of money 50 years ago, it was still too expensive to get invested. And what Chuck did was bring down the cost of getting invested in our country and in stocks. And as a result, got millions more Americans invested than otherwise would. The opportunity for the Trump accounts to come along and introduce saving and investing to every baby born in our country is so powerful for the future of our country. Because right out of the gate, from the moment you're born, to be a saver, to be an investor, seeing the power of compounding and investing in your life from age 0 to age 18 and knowing that's something that can help you the rest of your life, I think is so incredible.
Is this something that you would be open to being involved in more directly?
We have always told every administration that anything we can do to help savers and investors and the country, we will do. I think the administration's well aware of our belief in how strong a program this is, and we'll see how it plays out.
You and I actually have something in common, which is that we're both wrapping up the first year of our new jobs. I think yours maybe comes with a slightly bigger office than mine. How are you feeling as you come up on the end of your first year as the CEO of Schwab?
Well, I tell you, it's an honor to serve our 46 million client accounts every day. And so my alarm hasn't gone off once this year. I've woken up every day before it, ready to go, ready to serve our clients and make a difference for them.
What leadership advice have you found yourself coming back to this year?
I remember on my very first meeting with Chuck, I'd prepared this deck about one of the businesses that I was leading and its profitability and how we could make more money. And he kept asking me about our fees. And I was thinking, well, he knows our fees are lower than any of our competitors and that we could probably raise them, we'd make more money, and as our largest shareholder, he would flourish. And at the end, he said, Rick, you got to find a way to knock these fees down, make them lower and lower. And I said, well, Chuck, we'll give up a lot of profitability. And he said, no, we won't. Clients will do more business with us because they'll like us more, they'll refer us to others. And so after 2 years of business school, during which I learned a lot, I think in that one meeting, I learned an incredible amount about business and what has made Schwab so incredibly successful for 50 plus years.